Welcome to the lecture on partnership accounting. In this lecture, we will discuss about death of a partner. We have already discussed about admission of a partner, retirement of a partner. Now, in case of death of a partner, the accounting entry or accounting treatment will be similar to accounting entries of retirement of a partner. So, there will be minor changes in accounting treatment. At the time of admission, the incoming partner is called as admitting partner. At the time of retirement, the outgoing partner is called as retiring partner. Admitting or incoming partner, retiring or outgoing partner. In case of death, the partner is called as deceased partner. Now, in case of retirement of a partner, the outgoing partner will take away his part of capital plus his share of profit and loss till the date of retirement plus his share of reserve and surplus. Reserve and surplus includes general reserve, capital reserve, reserve fund, etc. Similarly, in case of death of a partner, the legal representative of deceased partner will take away the capital of deceased partner, his share of profit, and reserve and surplus, plus salary or commission payable to deceased partner for extra work done, interest on capital, interest on drawings, or interest on deceased partner's loan. All the adjustment will be done at the time of death of a partner. So, in case of death of a partner, the legal representative or nominee of a deceased partner will take away capital of a deceased partner, his share of profit and loss till the date of death, and his share in reserve and surplus. Reserve and surplus is undistributed profit which is reinvested into the business plus salary, commission, or interest on capital, interest on drawings, or interest on loan, whatever applicable to the deceased partner will take away by legal representative of deceased partner, and the remaining partner will continue the business. But for example, if A, B, and C are old partners, and in case of death of a partner C, Mr. A and B will continue the business. But in case there are two partners only, A and B, and in case of death of Mr. B, A cannot continue the partnership business, so the business will shut down. Business will wind up and dissolve. Now let's understand with the practical illustration. Illustration number 1. Rekha, Menaka and Mukta were partners in a business sharing profit and losses in the ratio of 2:1:1. So Rekha, Menaka and Mukta, there are three partners. and old ratio is 2:1:1. Their balance sheet as on 31st March 2021 is given below. Balance sheet assets and liability side. Plant and machinery, debtors, furniture and bank account given. On the liability side, capital account of all three partners, creditors, bills payable and general reserve is given. Remember, any type of reserve and surplus will be distributed among partners in their old profit sharing ratios at the time of recording entries. Mukta died on 1st July 2021. The date is very important because our balance sheet date is 31st March 2021 and date of death is 1st July 21. So from balance sheet date, that is 31st March 2021 till 1st July 21, that is April, May and June, 3 months. Remember, March is over, so April, May and June, 3 months are there. Mukta died on 1st July, so we will not count July month, even we will not count March month, because balance sheet closed on 31st March, so March ended, and from April onwards till 1st July we will count the months. So April, May and June, because on July 1st day Mukta died, so July will not come into picture. April, May, June, 3 months. 3 months profit will be distributed. First adjustment, plant and machinery was to be revalued to 70,000 rupees. Plant and machinery, there is adjustment in plant and machinery. So we will write in inner column, and RDD is to be created of 2,000 rupees. Reserve for doubtful debt is created from debtors. So there is adjustment in debtors also. Debtor is a person from whom money is receivable. Debtor is a customer from whom goods are sold on credit and money is receivable. So we will make provision for reserve for doubtful debt. The drawings of Mukta up to date of her death amounted to 10,000 rupees. Charge interest on drawings 1,000 rupees. So both the amount will come on partner's capital account debit side. Her share of goodwill should be calculated at 3 years purchased of the profit of last 4 years. This is number of years purchased, and we have to calculate average profit of last 4 years. All 4 years profit is given. First year profit is 1,50,000 rupees. Second year profit is 1,30,000 rupees. Third year profit 70,000 rupees, and fourth year profit is 50,000 rupees. We will sum up the profits and divide number of years. So we will get average profit. Then we will multiply with number of years purchased, that is 3 years, to get amount of goodwill of the firm. Then we will multiply with share of Mukta to get share of Mukta in goodwill. And last adjustment, the deceased partner's share profit up to date of her death, or to be calculated on the basis of average profit of last 2 years. This adjustment was about goodwill, and now this adjustment is about profit or loss up to date of death. Deceased partner's share up to date of death will be calculated on the basis of average profit of last 2 years, that is third year and fourth year, 70,000 and 50,000. We will first calculate average profit, Then we will find the share of Mukta in the profit of firm. Remember, we have to calculate average profit because Mukta died in between of the financial year, so we don't know as of now the actual profit for the year. So we will assume that average profit will continue in next year. Prepare profit and loss adjustment account, partners capital account, balance sheet of continuing firm. Continuing firm means balance sheet after death, and give working note of profit of goodwill. Profit and goodwill. So we will start with profit and loss adjustment account, partners capital account, and balance sheet first. Then we will provide working note. So in the books of partnership firm, first we will prepare profit and loss adjustment account, that is revaluation account. Debit side, credit side is given. On the debit side, we will record all types of notional loss and expenses. On the credit side, we record all types of notional profit and income, if any. Now, what is notional loss and notional profit? At the time of recording the transactions, that is related to revaluation of assets and liabilities, assets are not actually sold, so we have not earned profit in real life. Similarly, we have not increased or decreased liabilities in real, but at the time of revaluation, the value of liability can be changed. It is it is not the real loss or real profit. Increase in value of asset is not actual profit until we sell the asset. Therefore, it is called as notional profit and notional loss. Similarly, we don't record the notional profit and loss in profit and loss account. We record in profit and loss adjustment account. This is just a temporary account. Okay. Next, partners capital account, debit side, credit side of each partners. Then we will prepare balance sheet after date of death. So there will be only two partners, continuing partners, Rekha and Menka. Let's start solution. Rekha, Menka, and Mukta were partners in a business sharing profit and loss in the ratio 2:1:1. Their balance sheet. Let's record all the transactions in balance sheet first. Plant and machinery 60,000 rupees. There is adjustment in plant and machinery, so we will record it in inner column. Plant and machinery 60,000 rupees. Next, debtors 50,000 rupees. There is adjustment in debtors also, so we will record in inner column 50,000 rupees debtors. Furniture 30,000 rupees on the outer column. Bank amount we will write at the end. Next, on the liability side, capital account of each partners are given. So by balance brought down, this is the opening balance. Rekha 60,000 rupees, Menka 70,000 rupees, and Mukta 34,000 rupees. The amount of creditor is 18,000 rupees. We will write in balance sheet creditors 18,000 rupees. Bills payable 2,000 rupees. And general reserve 16,000 rupees. It is the undistributed profit. So we have to distribute among old partners in old ratio, that is 2 is to 1 is to 1. So in partners capital account, on credit side, remember liabilities always have credit balance. Capital account we have written on partners capital account credit side by balance brought down opening balance. Similarly, general reserve undistributed profit will also come on partners capital account credit side in the ratio 2 is to 1 is to 1. 16,000 will be distributed among Rekha, Menika and Mukta in the ratio 2 is to 1 is to 1. So 16,000 into 2 divided by 4, amount will be 8,000 for Rekha, 4,000 for Menka and Mukta. Balance sheet done. First adjustment, plant and machinery was to be revalued to 70,000 rupees. Plant and machinery amount, the book value was 60,000 rupees. Now it has been revalued to 70,000 rupees. So we have to add 10,000 rupees and 70,000 rupees will come on outer column. 10,000 rupees appreciation. If the fixed asset value increases, it is called as appreciation. If fixed asset value decreases, it is called as depreciation. Similarly, reduction in value of intangible assets, intangible fixed assets such as goodwill, copyright, patent, trademark, decrease in value of such assets are called as amortization. So, depreciation word is used at the time of decrease in value of tangible fixed assets, and amortization word is used in case of decrease in value of intangible fixed assets. Now, the second effect of plant and machinery will come on profit and loss adjustment account credit side, because value of asset is increased, so notional profit will be recorded on credit side. 10,000 rupees increase in plant and machinery. RDD is to be created of 2,000 rupees. First, we will reduce it from debtors 2,000 rupees. We have written 2,000 in bracket. It means it is a negative amount. So 50,000 minus 2,000 rupees. Balancing figure 48,000 rupees will come in the outer column, and the amount of RDD will be transferred to profit and loss adjustment account debit side, because while increase in value of assets we have written it on credit side, debtors value is decreased now, so it is recorded on profit and loss adjustment account debit side. Second adjustment, the drawings of Mukta up to the date of her death amounted to 10,000 rupees. So partners capital account, two drawings. In Mukta column, the amount is 10,000 rupees. And second effect will be in bank account. Mukta has withdrawn money from the business, so bank balance will be reduced. So bank account, the amount is 60,000 rupees. Opening balance is 60,000 rupees less the amount of drawings 10,000 rupees. The amount will be 50,000 rupees bank balance. Now, third adjustment, charge interest on drawings 1000 rupees. So, first effect, partner's capital account debit side to interest on drawings in Mukta column only because Mukta has withdrawn money for personal use. So, 1000 rupees in partner's capital account debit side, Mukta column. Next, fourth adjustment, her share of goodwill should be calculated at 3 years purchased of the profit for the last 4 years. So now we have to calculate goodwill. Let's calculate the amount of goodwill. Working note number 1, calculation of goodwill. 4 years profit is given. First year, second year, third year and fourth year. First year profit is 1,50,000 rupees. Second year profit is 1,30,000 rupees. Third year profit 70,000 rupees. Fourth year profit is 50,000 rupees. We will sum up the amount. 4 lakh rupees is total. So total profit divided by number of years, that is 4 lakh divided by number of years, 4 years, equal to 1 lakh rupees. This is the average profit. Now we will find the share of Mukta. Share of Mukta is 1 by 4 because the profit sharing ratio is 2:1:1. So Mukta's share is 1 by 4 and amount will be 1 lakh into 1 divided by 4, 25,000 rupees, multiplied by number of years purchased, that is 3 years. So 25,000 into 3 years, 75,000 rupees is the amount of goodwill. Share of goodwill of Mukta. So as per question, her share of goodwill should be calculated at 3 years purchase of profit for last 4 years. 4-year profit is given. So we have calculated average profit first by adding all profit divided by number of years. We have got 1 lakh rupees average profit. We have find the share of Mukta in average profit, that is 1 by 4. So we have got 25,000 rupees. Last multiply by number of years purchased, that is 3 years purchased. So amount is 75,000 rupees. The share of Mukta's goodwill. So we have to raise the amount of goodwill 75,000 rupees. So first, goodwill account, partners capital account credit side. Goodwill account is 75,000 rupees. And then the next effect will be balance sheet, asset side, goodwill 75,000 rupees. In the question, no information related to distribution of goodwill among remaining partners is given. So we have continued goodwill in the balance sheet. So first effect of goodwill, partners capital account credit side, and second effect balance sheet asset side. We have raised goodwill up to the share of deceased partner. And the last adjustment, the deceased partner's share of profit up to date of death to be calculated on the basis of average profit of last 2 years, that is third year and fourth year. So similar to goodwill calculation, now we have to calculate the share of mukta in profit. So working note number 2, calculation of profit. We have to calculate profit of last 2 years. So average profit of last 2 years is 70,000 rupees plus 50,000 rupees divided by 2. 1,20,000 divided by 2, 60,000 rupees is the average profit of whole firm. Now we have to calculate profit of share, profit of mukta, that is 1/4. 60,000 into 1 divided by 4, that is 15,000 rupees. So 15,000 is the profit of whole year, multiply by 3 months divided by 12 months, because Mukta was alive for 3 months, April, May, June. So we have to calculate 15,000 multiplied by 3 by 12. So amount will be 15,000 multiplied by 3 by 12. 3,750 rupees is the share of Mukta in profit. And now first effect will be partners capital account credit side. 3,750 by profit and loss suspense account. Suspense account we have created because the deceased partner is not going to continue in the business. Next effect will be in balance sheet asset side, profit and loss suspense account, 3,750 rupees, but interest on drawings is not yet recorded, so it will be deducted from the profit. 1,000 rupees interest on drawings. First effect we have given on partners capital account debit side, 2 interest on drawings. Second effect will be balance sheet asset side. We will reduce the amount of profit of Mukta by 1,000 rupees. Remaining amount 2,750 rupees will be in the outer column. So we can see that profit and loss adjustment account credit side is more, 10,000 rupees. It will be recorded on debit side. It will be shifted to debit side. 10,000 rupees minus 2,000 rupees. Balancing amount is 8,000 rupees. This 8,000 rupees will be distributed among old partners in old ratio, that is 2:1:1. So 8,000 rupees will be distributed in the partners 2:1:1 ratio. So Rekha's share will be 8,000 into 2 divided by 4, that is 4,000 rupees. Similarly, Menka and Mukta's share is half of the share of Rekha. So if Rekha's share in profit is 4,000 rupees, then Menka's and Mukta's share will be 2,000 rupees. So 4,000 rupees for Rekha, 2,000 and 2,000 rupees for Menka and Mukta. This balancing figure represents profit because on profit and loss adjustment account credit side, we record increase in value of assets, that is a kind of notional profit. So notional profit is higher than debit side, that is notional loss. Therefore, the balancing figure will be profit and it will be distributed among old partners in old profit sharing ratio. And now the amount will be shifted to partners capital account credit side by profit and loss adjustment account. From profit and loss adjustment account debit side to partners capital account credit side. In profit and loss adjustment account, we will write to partners capital account, and on partners capital account credit side, we will write by profit and loss adjustment account. So the amount is 4,000 rupees for Rekha, 2,000 rupees for Menaka, and 2,000 rupees for Mukta. Now we will calculate the total of partners capital account. Credit side of Rekha and Menaka is higher by 72,000 rupees. So 72,000 rupees Rekha, and Mukta amount is 76,000 rupees. Both the amount will be shifted to debit side, 72,000 rupees and 76,000 rupees. Balancing figure will be two balance carried down. It is the closing balance because continuing partners will continue business in future after death of Mukta. So balancing figure will be 72,000 rupees for Rekha and 76,000 rupees for Menka. Unfortunately, Mukta will not continue the business, so her closing balance will be nil, and balancing figure of Mukta will be transferred to her executor's loan account. That is legal representative of Mukta's loan account, because the amount is not yet paid to executive, so it is payable, therefore it is a loan for the business. So now we will calculate the total of Mukta capital account credit side, that is 34 plus 4,000 plus 2,000 plus 75,000 plus 3,750. Total is 1,18,750. It will be shifted to debit side. 1,18,750 minus 11,000 rupees. Balancing figure will be 1,07,750. Now the closing balance of partners capital account will be transferred to balance sheet liability side capital account Rekha and Menka, and Mukta's executor's loan account will be also be transferred to balance sheet liability side. So Rekha capital account is 72,000 rupees. Menka capital account 76,000 rupees. Total will be on the outer column 1,48,000 rupees. Mukta's representative loan account will be 1,07,750. Now we will calculate total. Two lakh 75,750 liability side total. 2,75,750 asset side total. Balance sheet is tallied. So let's take a quick review. First, we have prepared revaluation account, that is profit and loss adjustment account, then partners capital account and balance sheet. Balancing amount of profit and loss adjustment account transferred to partners capital account credit side, and closing balance of capital account will be transferred to balance sheet liability side, and deceased partners representative loan account will be transferred to partners loan account. Balance sheet is tallied. Second illustration, Rakesh, Mahesh and Mukesh were partners sharing profit and loss in the ratio 3:2:1. Their balance sheet as on 31st March 2019 is given. Asset side and liability side. Plant and machinery, motor truck, debtors less reserve for doubtful debts. Investment, bank balance. On the liability side, capital account of all the three partners, creditors, bank loan and bill payable. Mukesh died on 30th June 2019 and the following adjustments were made. Rakesh, Mahesh and Mukesh, three partners are there and their old ratio is 3:2:1. Mukesh died on 30th June, so from 31st March till 30th June, that is April, May, June, 3 months. So 3 months later, Mukesh died. Assets were revalued as plant and machinery 44,000 rupees, motor truck 18,000 rupees, investment 17,000 rupees. There are adjustment in these assets, so we will put the amount in the inner column. Second, all debtors were good, so the amount of RDD will be cancelled. Goodwill of the firm valued at 2 times average profit of last 5 years. Number of years purchased is 2 years. Goodwill of the firm valued at 2 times average profit of last 5 years. So, number of years purchased 2. Average profit will be calculated for 5 years. Mukesh's share of profit up to his death to be calculated on the basis of average profit of last 2 years. This is the calculation of goodwill, and at the time of calculation of profit, only 2 years average profit will be considered. Fifth point, 5 years profits are given. Year 1 6,000 rupees, year 2 11,000 rupees, year 3 7,000 rupees, year 4 12,000 rupees, and year 5 24,000 rupees. Prepare profit and loss adjustment account, partners capital account, balance sheet as on 1st July 2019. Old profit sharing ratio is 3:2:1. So we will prepare profit and loss adjustment account in the books of partnership form. Profit and loss adjustment account is also called as revaluation account. Partner capital account of Rakesh, Mahesh and Mukesh, and balance sheet as on 1st July 2019. Remember, Mukesh died on 30th June 2019. So new balance sheet will be recorded from next day. So new balance sheet will be recorded from next day onwards. That is 1st July 2019. Let's start with balance sheet. Plant and machinery 40,000 rupees. There is adjustment in plant and machinery. So we will write it in inner column. Motor truck 20,000 rupees. debtors 16,000 rupees minus RDD 2,000 rupees. Balancing figure is 14,000 rupees, but adjustment number 2 is given. All debtors are good, that is 16,000 rupees will be recorded on outer column. Now actual value was 14,000 rupees. Debtors increased by 2,000 rupees due to RDD. So increase in value of asset is a kind of notional profit, and it will be recorded on profit and loss adjustment account. Credit side, RDD account 2,000 rupees. Next, third adjustment, goodwill of the firm valued at 2 times the average profit of last 5 years, and no goodwill account to be shown in the books of the firm. It means goodwill will be raised up to the share of deceased partner, and then it will be distributed among, or it will be write off in the books, or and then it will be written off in new partners. Next, investment 18,000 rupees, bank balance 14,000 rupees. There is no adjustment in bank, so we will write as it is. Capital account, opening balance will be recorded on partner's capital account credit side by balance brought down. Rakesh amount is 30,000 rupees, Mahesh 20,000 rupees, and Mukesh 10,000 rupees. Creditors 8,000 rupees, balance sheet liability side creditors 8,000 rupees, bank loan 20,000 rupees, and bills payable 18,000 rupees. No adjustment related to creditors, bank loan, and bill payable is given, so we will record as it is. First adjustment, assets were revalued as plant and machinery 44,000 rupees. The book value of plant and machinery is 40,000 rupees. We have to increase the value with 4,000 rupees to get 44,000 rupees. Increase in value of asset will come on revaluation account credit side by plant and machinery by 4,000 rupees. Next, motor truck 18,000 rupees. The value of motor truck is 20,000 rupees. We have to reduce by 2,000 rupees, and balancing 18,000 rupees will be on outer column. In case of motor truck, the value is decreased, so it will come on revaluation account debit side 2,000 rupees. Investment 17,000 rupees. So the actual amount of investment is 18,000 rupees. 1,000 rupees will be reduced to get 17,000 rupees, and reduction in value of assets will be recorded on profit and loss account debit side 1,000 rupees. Adjustment number 3, goodwill of the firm valued at 2 times the average profit of last 5 years. So let's calculate the amount of goodwill. Goodwill of the firm valued at 2 times the average profit of last 5 years. 5 years profit is given in adjustment number 5. So working note number 1, calculation of goodwill. First we have to add the amount of profit of 5 years, that is 6,000 rupees plus 11,000 rupees plus 7,000 rupees plus 12,000 and 24,000. Total is 60,000 rupees. for 5 years. So we will divide 60,000 rupees with 5 years. So we will get 12,000 rupees. So we will get 12,000 rupees of goodwill of firm into 2 years purchased 2 times the average profit. So multiply by 2 years. Now 24,000 rupees. And now we will calculate the share of Mukesh. So multiply by 1 by 6. 3 plus 2 plus 1. So 24,000 multiplied by 1 by 6. 4,000 rupees will be goodwill of Mukesh. Now these 4,000 rupees will be distributed among Rakesh and Mahesh in their ratio 3:2. So 4,000 rupees will be distributed in 3:2. 4,000 rupees multiplied by 3 by 5. We will get 2,400 rupees for Rakesh, and balancing 1,600 rupees will be for Mahesh. Adjustment number 3 says that no goodwill account to be shown in the books of the firm. It means it will be written off among continuing partners. So 4,000 rupees first it will be raised in Mukesh share, then it will be distributed among remaining partners. So the amount of goodwill on partners capital account credit side by Rakesh capital account 2,400 and Mahesh capital account 1,600, and then at the time of return off it will be recorded on partners capital account debit side to Mukesh capital account 2,400 in Rakesh column and 1,600 in Mahesh column. First, the goodwill of 4,000 rupees is raised and then it is distributed among continuing partners in gain ratio. Next adjustment number 4. Mukesh share of profit up to date of death will be calculated on the basis of average profit of last 2 years. So next calculation will be working note number 2, calculation of Mukesh share of profit. It will be recorded for profit of last 2 years, 12,000 rupees and 24,000 rupees divided by 2 years. Amount will be 12 plus 24, 36,000 divided by 2, 18,000 rupees. Average profit is 18,000 rupees. Now we will find out the share of Mukesh in the profit. Mukesh share is 1 by 6. So 3,000 rupees will be share of Mukesh for whole year. Then it will be multiplied with 3 months, 3 by 12. Now 3,000 divided by 4, 750 rupees. This is the share of Mukesh up till the date of death. So calculation of profit we have done by calculating average profit of last 2 years, that is 12,000 and 24,000, total 36,000 rupees divided by 2 years. So average profit of the firm is 18,000 rupees. 18,000 rupees is the profit of all 3 partners. We have to find out the share of Mukesh, the deceased partner. So 18,000 multiplied by 1 by 6, the share of Mukesh. We have got 3,000 rupees. 3,000 rupees is profit of whole year. We have to calculate the profit up to date of death. So Mukesh died on 30th June, that is 3 months after opening new balance sheet. So 3000 multiplied by 3 by 12, we have got 750 rupees. So 750 rupees will be recorded on partner's capital account credit side, profit and loss suspense account in Mukesh column 750 rupees. And second effect will be on balance sheet asset side. Remember, profit and loss suspense account is created because it is not the actual profit. It is the suspense account is created and it will be set off at the end of the year by calculating actual profit, and then we will make adjustment in it. So profit and loss account suspense account will be recorded at the rate 750 rupees. I think all the adjustment are done. Fifth adjustment was about average profit, that is we have already covered. So first we will close the profit and loss adjustment account. Credit side is more, 6000 rupees total. It will be shifted to debit side and balancing figure will be 3000 rupees. This 3000 rupees will be distributed among old partners in old ratio, that is 3:2:1. So the amount will be Rakesh 1500, Mahesh 1000 rupees, and Mukesh 500 rupees. 3000 rupees is distributed among old partners in 3:2:1. 3000 into 3 divided by 6, 1500. 3000 multiplied by 2 by 6, 1000 rupees. And 3000 multiplied by 1 by 6, 500 rupees. Then the amount will be shifted to partner capital account credit side by profit and loss adjustment account. Rakesh 1500, Mahesh 1000 rupees, and Mukesh 500 rupees. There are no other adjustment in partner capital account, so we will close the partner's capital account. Rakesh capital account credit side is higher, 31,500 rupees. It will be shifted to debit side, minus 2,400 rupees. 29,100 is balancing figure. It will be closing balance, to balance carried down. Similarly, we will calculate for Mahesh capital account. Total is 21,000 rupees. It will be shifted to debit side. 21,000 minus 1,600, 19,400. And Mukesh capital account credit side is also higher, 10,000, 10,000 plus 500 plus 2,400 plus 1,600 plus 750. 15,250 is total amount. It will be shifted to debit side and balancing figure will be to Mukesh executor's account or to Mukesh executor's loan account. And this balancing figure will be shifted to balance sheet liability side. Capital account, Rakesh capital account is 29,100. Mahesh capital account is 19,400. Total will be recorded in outer column. 29,100 plus 19,400, 48,500. And Mukesh executor's loan account will be recorded at 15,250 rupees. Now, total of liability side, 1,09,750 rupees, and total of asset side is 1,09,750 rupees. The balance sheet is tallied. So in this question, important adjustment was goodwill and share of Mukesh profit. First, we have calculated profit and loss adjustment account. The balancing figure distributed among old partners in old ratio, and balancing figure of partners capital account is recorded. For continuing partner, it is the closing balance, and for deceased partner, it is shifted to deceased partner's executor's loan account and recorded on balance sheet liability side. Then balance sheet assets and liabilities are tallied